Hello there. Today is Thursday, April 24th, and welcome to this week's edition of the Kluge Wealth Advisory Group Client Connect video. In this week's video, we're going to give you a quick update on where things stand in the big picture, as well as touch on a couple of frequently asked questions that we've encountered over the course of our client conversations here this week. So why don't we jump right into things here with that update. So the bottom line is that in terms of the thesis that the Liberation Day tariff announcement was a negotiating position, that continues to appear to be playing out. We have seen trade discussions develop with, at least according to U.S. Treasury Secretary Scott Bessent, approximately 100 countries. There have been some headlines about a significant deal with India, which looks, again, based on those headlines, looks to be fairly close. As well, you've seen, I think on a positive note, you've seen de-escalation with China, with both the U.S. administration and the Chinese government backing down from some of their more extreme positions and acknowledging the importance of the bilateral relationship. So I think those are very, very positive, and I think again, the hypothesis that those Liberation Day tariffs are a negotiating position and not policy continue to play out. Now, we'll have to see for sure, but so far, so good. In terms of markets, we have seen a recovery off the lows in the market. Now, if we take a look at a chart, you can see that the S&P 500 and Nasdaq in the U.S. bottomed somewhere around April 7th and April 8th, and have been making steady but choppy progress higher. So that's a good thing. And the longer we go in time, and the farther we get away from those lows hit on April 7th and 8th, the more certain we can be that the low has been put in. Now, there is no certainty in this situation because we are dealing with some situation that's very fluid, and it is, as I mentioned before, definitely a 2 or 3 steps forward, 1 step back situation. So I anticipate that there will be further bouts of volatility, but the further we get away from those April 7th and 8th lows, the more and more likely it looks like those are the lows, and that any other volatility is what they would term backing and filling. So that's an unambiguous positive. And of course, I would want to repeat my message from a number of previous videos, just saying that if you've been holding cash or you have a long-term time horizon for those funds, that this is definitely an opportunity to get money invested. It might not be the opportunity that may be in front of us, that may be behind us, but we're definitely dealing with an opportunity that if we look out 6 to 12 months, will based on all historical pattern, will work out very, very well. Now, getting into some frequently asked questions, there are two that really surface quite frequently over the course of our conversations. The first was about what's been going on with Donald Trump and the head of the Federal Reserve, Jerome Powell. And the second has to do with, is there a framework that we can use to understand the process that's been happening, or the way events have taken place. So I want to address both of those. In terms of the relationship, and sort of the back and forth between Jerome Powell and Donald Trump this week, I think the key question is can Donald Trump fire Jerome Powell? And the answer is technically yes, but it's extremely difficult. If I were to put things on a scale from 1 to 10, with 1 being easy and 10 being impossible, firing the head of the Federal Reserve is going to be a 9.5. It's very difficult, technically possible, but it's not something that you would consider to be really an outcome unless we entered some very extreme circumstances, which we have no indication that we're in. This sort of the corollary question that comes up to why would can Trump actually fire Jerome Powell is why would he even think about it? Well, the answer really comes down to a dispute about monetary policy. Jerome Powell, for good reason, is concerned about inflation reemerging, and that has clearly been communicated in various press conferences, and that does have some basis, right? If you impose tariffs, costs could go up. And Jerome Powell is clearly worried that it's not going to be a one-time cost increase, as historically shown, but could be a serial cost increase or price increase, which would meet the definition of inflation that they need to combat. Now, on the other hand, President Trump's point would be that the current real-time measures of inflation in the U.S. That use real-time rent and other real-time data show that U.S. inflation is substantially below the 2% target that the Federal Reserve has, and so therefore, in the mind of Donald Trump, if inflation is below target, you should be lowering interest rates from a restrictive level where they are now. So currently U.S. interest rates are at a level that will slow down the U.S. economy to you'd want to reduce those rates at least to a neutral level. So that would mean effectively moving US overnight rates from about 4.5 to about 2. So there's obviously a policy dispute that's being played out in public here, and with there's a lot of color going on. But again, despite any of the dire headlines that we have seen, it is very, very near on impossible to fire the head of the Federal Reserve. And really what this comes down to is a policy dispute in which both parties, frankly, have a point. Again, that is not I'm not trying to make a partisan statement or express any personal opinion there, but I want to just remain neutral and say, what, if I can argue both sides and they both have a point. The other question we got a lot of was, looking at, is there a paradigm or is there a frame of reference that we can look through the current events, that help them fit into a pattern, or they fit into fit into some sort of, reasonable or logical order. And really what I have to put out here is that, that yes, there is, and we actually have to go back to Donald Trump's book, The Art of the Game. Now, or sorry, The Art of the Game, The Art of the Deal, my apologies. So in The Art of the Deal, Trump outlines and says very explicitly, this is my negotiating practice, right? It has 4 steps. The first step is you make an outrageous demand that causes the other party to react and not set their own agenda items. And again, very clearly in the situation, Liberation Day tariffs, that is definitely an outrageous demand that caused everybody to react. The second phase in the Art of the Deal pattern is then information overload, right? Introduce irrelevant items, irrelevant questions, irrelevant fights. I think that we've frankly seen that happening, and that even fits in with the musings about firing Jerome Powell. It's just you're trying to flood the field and you're trying to keep your opponents off balance and unfocused. Phase 3 is observe, which is you just see what happens. And then phase 4 is begin the actual negotiations. So I think, frankly, from my own judgment, we're somewhere between step 2 and step 3 of this process. And so we're going to see what happens. And then we're going to actually get down to some serious negotiations here. So what's been happening has frankly fit very well within this framework. This framework is messy, and of course the news events of the last month, really last 6 weeks, have been very messy, but it definitely fits. There is academic backing for this type of a negotiation style. In game theory, one of the basic tenets of game theory is that the person that controls the meeting agenda controls the outcome, and this type of an art of the deal type of negotiation strategy is definitely designed to control the agenda. Whether that is a good thing or a bad thing, I will let you and history decide, but I'm just trying to give you the framework here to show that there is a pattern, and that this is not the way that this is occurring is not coming out of the blue. So the best thing that we can do here, frankly, is again look through the noise, listen for the signal, and use it to our advantage, which is exactly what we've been doing. Again, to reiterate, we do also see a question coming up, what are we doing? And the answer is what we are doing is on a regular basis. We get a bad down day, we're buyers. Plain and simple. When we've seen this level of uncertainty before in the past, future returns have always been big. Now, that doesn't mean it's going to, we can't go lower in 2 months, but the bottom line is that, based on, many, many quantitative studies that I can see, is that forward-looking returns from this level of uncertainty are very high, often north of 20%, which would definitely not only put us to a full recovery, but would actually then put us into new high territory. So that's why, even though this is very difficult and it is a bit of a white knuckle ride, I do urge optimism, and I'm optimistic myself. So of course, we are here to help. If you have any questions, please book us online with Calendly, call, email, any way that you want to reach us. We're happy to have a conversation, and we'll look forward to your questions, and we'll look forward to speaking each and every one of you very soon. Thank you very much, and thank you for your trust and confidence.